Hello again. I'm Tehsin Aslam, Chief Executive of Abacus Wills and Trusts. In last week's episode, I did a diagram here to explain what happens when people just write a basic will. So what's the solution? People say, well, how can we protect our estate? A trust, which we call, in Inland Revenue, call it a living trust. I had given it a commercial name of the Asset Protection Trust. Within this trust, in the UK, we can, the assets that will be covered in there will be up to 650,000. Anything above that will be subject to inheritance tax. But for our friends who live in other countries with no inheritance tax liability, you can put an unlimited amount in there. Let's talk about inheritance tax. So this part of the presentation is for people who are living in the UK or they have assets in the UK which are subject to inheritance tax, and let's look at how we can try and help you. We would set up a special trust which is called a pilot trust. In one pilot trust, you can put in one exemption limit. After 7 years, this will become inheritance tax free, and it will also last for 125 years. Husband and wife will have their own trusts, and they will appoint the children as their trustees and beneficiaries. As long as they don't benefit from the assets that are in the trust themselves, the assets will be protected. But there are conditions attached to it. Inland Revenue says that you can't benefit when you've given away something. So a lot of people make a big mistake, because what a lot of people do is give, for example, they have properties which are buy-to-let. They give the property to their children, for example, and at the land registry it becomes registered in the name of the children, but they continue to take the rental income themselves, which means that it doesn't fall outside of the estate. If they're continuing to benefit from it, it will still remain part of their estate. The golden rule is that when you make a gift, you can't benefit from it. Only then will it become inheritance tax free. When one person has passed away, surviving spouse is no longer a spouse. So when they become a widow, they can benefit from it. These trusts are excellent tools for doing bloodline planning, which means that we can plan for our future generations. All my clients say to me, we want to make sure that only our children benefit from it, no one else. That only our bloodline children can take advantage of our hard-earned money. But by gifting it to them, they won't achieve that. Or by not doing anything, they won't achieve it. The only way they can achieve that is by putting the assets into the living trust or the pilot trust during their lifetime. Now I'm just going to have a look at some of the questions that my viewers have sent in, and they're actually from different parts of the world. So let me start off with Joanne from Maidenhead in the UK. Joanne asks, what if my property is valued more than 650,000? Can I still put it in the living trust? Well, Joanne, yes you can, but as I explained to you earlier, that when you're in the UK or your assets are in the UK, your inheritance tax exemption limit is £325,000. Joanne, if you're married, then your exemption limit obviously will be doubled. Yours and your husband's will be calculated together. You would need to do some planning if you want to save the inheritance tax on whatever is above the exemption limit. So you will need to do some planning. But whatever, you can put it in, but when you both pass away, whatever is above 650,000 will be charged at 40% inheritance tax. Another question from Kulfan from the UAE. He states that my family owns property in London, but we're UAE nationals and reside in Dubai. Will inheritance tax still affect us as we do not live in the UK? Well, Kulfan, unfortunately it will, because even though you're non-domiciled in the UK, you own assets in the UK, even though you don't live here, all your assets in the UK will still be subject to inheritance tax. You'll still be entitled to the exemption limit of £325,000 per person, but the balance of your assets will be charged at 40%. So if you have assets which are more than that, more than your exemption limit, I suggest that you look at doing inheritance tax planning. Another question, Ramesh from London. Can probate only be done via solicitors? Or could we as a family not complete the probate forms ourselves? Well, you can complete them yourselves, but because there's such complicated forms, especially when the assets are above the inheritance tax exemption limit, the big bundles of forms, most of the time what happens is that people come and they just hand the forms over to us and they say, look, we've tried it, we can't do it, it's too complicated, can you please handle this for us? I hope this episode has been helpful, and I look forward to seeing you again in the next episode. Until then, please like, share and subscribe, and if you have any questions, just email on the link below. And it's goodbye from me, and I look forward to seeing you again.